Paying tax is compulsory. Overpaying tax is optional. If you're a business owner, tax is not something you can avoid. But what many people don't realize is this: the amount you pay is largely influenced by how well you plan. In 2026, with tighter enforcement, digital tax system, and reduced tolerance for informal records, businesses that don't plan will pay more than they should. I want to shift your mindset from tax compliance to tax strategy. Most small businesses only think about a deadline is close. Nigeria Revenue Service sends a notice or penalties have already started. That's not tax planning. That's damage control. Tax planning is what smart businesses do months before filing, using proper records, structure, and lawful incentives to reduce risk and save money. Let's break this down clearly. Let's break this down clearly. Point number 1: tax evasion or tax evasion versus tax planning. Let's clear a major confusion. Tax evasion is illegal. It involves hiding income, falsifying records, or refusing to comply. Whereas tax planning is completely legal. It means understanding the tax law, keeping proper records, using allowable deductions, incentives, and reliefs. Tax planning doesn't mean paying no tax. It means paying the right amount. It means paying the right amount. Point number 2: allowable deductions businesses often miss. Many small business enterprises overpay tax simply because their records are weak. Common missed deductions include legitimate operating expenses not properly documented, staff-related costs not structured correctly, asset-related expenses not captured properly, business use expenses mixed with personal spending. When records are incomplete, tax authorities default to assumptions, and assumptions usually mean higher tax. Good bookkeeping is not admin work. It is not an administration work. It is a tax-saving tool. It is a tax-saving tool. And point number 3: incentives and reliefs under the new law. Under the new tax reform or reforms, there are incentives and reliefs designed to encourage business growth, support specific sectors, promote compliance, But here's the catch. You can't claim what you can't prove. If your records are weak, you automatically disqualify yourself from benefits that were created to help you. Tax incentives don't work without accounting structure. Let's look at point number 4. Structuring your business for tax efficiency. How your business is structured matters. How your business is structured matters. This includes business registration type, how income flows, how expenses are classified, how owners are paid. Two businesses earning the same revenue can pay very different taxes based purely on structure. This is where strategic tax planning makes a real difference. I want us to give this case study as an example. We work with a growing small and medium enterprise that felt their tax bill was too high. After reviewing their records, expenses were poorly categorized. Some deductions were not documented. Their structure wasn't tax efficient. By cleaning up records and restructuring properly, their tax exposure reduced significantly without doing anything illegal. Same business, same revenue, better records, better strategy. Is tax planning legal? Yes. When done properly, it is encouraged by law. When should I start planning? Oh, sorry, I'm looking at that's common, frequently asked questions. Is tax planning illegal? Yes. When done properly, it is encouraged by law. Number 2, when should I start planning? Not at filing time. Planning should start now, before the year ends. That is, for this year, you need to start planning now. Do small businesses really benefit? Absolutely. SME benefits the most because small mistakes cost them proportionally more. If you want to stop guessing and start planning properly, we are offering a tax strategy session for business owners. In this session, we'll help you identify tax risks, spot missed deductions, understand how the 2026 reforms affect your business. Send us a WhatsApp message with the word tax and we'll schedule your session. Paying tax is compulsory. Overpaying is optional. Thank you for listening. Until I will come your way again, just stay blessed.